Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro currency. So yesterday the major event has happened that we're waiting for this week. This is Fed statement. In general, as you can see by the market reaction, the overall statement was treated not as hawkish enough compared to the expectations. So despite that, Fed has said that probably they will take the pause in the rate cut cycle, but in general the overall assessment economy and further comments from the Fed was not hawkish enough to prove to the markets, to participants, to the investors that indeed the policy could change and Fed could take more hawkish position. So as a result, after the first reaction on the statement that it will be some pause in the rate cutting, a few minutes later overall action has been reversed and market has skyrocketed to the upside. In general, this corresponds to our analysis. So because in recent 3 weeks approximately, 3-4 weeks probably, we talked about the changing the balance between the economies of the European Union and United States. So in general, this is one side changing because European Union economy, it's everything clear about it, that stands zero interest rates, anemic growth, so it can't be just worse. But United States, the situation could be worse, and especially in the recent 2 weeks, we see that the overall statistics was not really encouraging, and that shift the balance a bit in a weaker United States dollar. And as a reaction of that, you can see on the euro currency as well, this chart. So what we could expect in the nearest time. Today, guys, is the day before the holidays. This long weekend will be, and hardly we will get a big activity today. So market has got reaction. Actually, market also has hit some intraday targets. So probably hardly we will get some really breakouts on today's session. Small problem that some profit could be taken, and I'm not sure that we'll see some big volatility. At the same time, overall situation on the euro stands positive because trend here has turned bullish. On the weekly chart, trend already stands bullish. Currently, market is not at overbought, so here actually it has the free space. And next resistance in 1207, 1235, so confidence resistance. And I do not see any reasons to suggest that market will not reach it. So because it's really no resistance stands above it. And that is, as I said, relatively free space, and this market could move through and then reach the confidence. So that's the nearest term destination point. Besides, in the current action, you can see market keeps harmonies very, very well. So if you will take a look at the chart, you'll see that this swings approximately very similar to what we see to the left side. And it means that next action should be somewhere back to the 1215, 1225, 1235 area where it was previous top was. And then, following these logics, could be some retracement. And that's also suggested by the existence of the confidence. So it's also very probable that retracement will be. Also, it's important, as we said in the weekly chart, and we'll talk about it again in the coming weekly report, that 1235 is very close to the upper border of the channel on the weekly chart. That's also will be additional resistance. So definitely here some reaction of the market should happen. But until this level, well, market easily could pass through this area. On the 4-hour time frame chart, you could see that market with this recent action has completed the A, B, C bottom XLP target, moved above the weekly pivot resistance one, which is great sign for the bulls because breaking of the weekly pivot resistance level means that this is not the retracement of the previous move down. And this is some kind of a bullish trend continuation lag. That's indeed has happened. Besides, our suggestion that this price action that we saw yesterday was a reversal, not just some pause in downward action, has been confirmed, because market with Israel taking out of this top, and if you remember, that was our C point of the ABC top pattern. So it means that this pattern does not exist anymore, and that is total confirmation of this is not a retracement. On the hourly chart, our setup also has worked perfect, maybe not without the help external driving factors, which is the Fed, but still everything was done just perfectly. So if you remember, yesterday we started at this point, we said this will be minor butterfly to complete the major 618 resistance. That has happened. Then we expect to drop back to these lows. It's approximately 111 lows, and indeed on this drop this level has been reached and even exceeded a bit, and then upward action has started. So the hand shoulders has worked perfectly. Yes, it has a bit non-typical shape, but we should make the discount on that, just because the Fed was involved in a normal technical process of the forming of the pattern. That has led to some specific shape of the right arm, but still by the harmonic of this pattern, by the levels that has been achieved, so overall price behavior was just perfect. Besides, this spike down was not too fast. If you will take a look at the 5-minute chart or even 15-minute chart, you will see that here was approximately 10-15 minutes of the drop, and market has reached this level. So take a look. Starting this collapse, this 15-minute candle, and then on the upward action has started in the next 15 minutes. So it was not just in blink of an eye action, it was relatively slow. So currently, as market has hit the XOP, it is possible that some reaction could follow and maybe market will show the retracement. So currently I do not see any clear bearish patterns. The one thing that we theoretically could keep an eye is a possible kind of the lookalike double repo pattern. So it's not, of course, perfect double repo, because it consists mostly of the just one big move in the middle of the thrust. But in general, it has a sufficient number of candles, and if you'll take a look at the 30-minute chart, this thrust will be even better. It's looking better here. So if double repo will be formed and the market will start reversal here, well, in this case, I would suggest that some 30% retracement easily could be done. It's approximately to the 1135 area, maybe a bit higher. If no double repo will be formed, market will continue to move higher. Well, in this case, next destination, as we said, will be right here, 1235 area. So that's our view on the market. So if you have not taken the position here, as we said, first on this reversal session, then on the hand shoulders yesterday before Fed statement, you trade on the daily chart. Currently, it's better not probably sit on the hands, because the major opportunity for taking the position will be after the reaching of the conference. As soon as it will happen. Here, the moderate retracement probably could happen again, and that will be better opportunity for taking the long position rather than trying to catch entry right here, ride some minor at distance, and then sit in the drawdown of the possible deep retracement. So currently, it's not very attractive point for taking the long position for those of you who trade on the daily chart. For the scalp traders, as I said, well, you could keep watching for clear patterns. I'm not sure that you will definitely trade them, because currently we are coming to the holidays. It's time for rest, but still something could be formed, although maybe it will look not as attractive as usual. So, and maybe today is such a session where maybe better choice is just do nothing and be focused on the trading on the next week.